Well, the lesson for people running banks is don't take too much risk and don't stretch out your duration just trying to capture business, because in the end, there's no free lunch. You're going to come, in the end, you get bit by taking that extra risk. I don't know that there's any particular lessons for investors at this point, besides understand what you're investing in, understand whether or not it's a blue chip bank or more of a aggressive regional bank. And I think that that's part of the reason why we're a little bit more favorable towards more larger established banks with more traditional sort of reserves, because we just don't like that kind of risk like we saw with SVB this week.
Right. You know, we had a VC, a venture capitalist from Fusion Fund just a little while ago, and Lu Zhang, and yeah, exactly. So she made the point that if 2022 was bad for tech, 2023 could get worse in terms of the markdowns. We are already seeing SoftBank trade softer in the session today, down about 1.5% because some of those markdowns have not yet happened, and you don't know how bad it could get with rising interest rates. What's your sense?
I think it is going to get worse in 2023, and it's part of our overall thesis that technology that makes money, has a reasonable market share, a business plan for the future, is going to be the tech that's going to recover. The tech that is not going to recover is the tech that is funded by very, very cheap VC money, which simply doesn't exist anymore. So I think you're going to see private equity VC money start to dry up. And if these companies are basically buying market share at the risk of profitability, I don't know that I'd be really particularly interested in those type of assets.
Michael, I want to ask you to put your speculation cap on for just a second, because, you know, the repricing one has come to the Fed, right? So, you know, Goldman's suggesting now that they're not going to hike 25 bips. The market's still pricing at 25 bips. But does this instance do you think that gives them pause? Because there's still this expectation, at least in the market pricing, that we're going to see a few more hikes. But is this enough in your view? Or is it still too hot?
It might be, actually, because, you know, the Fed, if the Fed raises a quarter point, that was always the expectation. Before this happened. In fact, there were some, including myself, thought it might be 50 basis points. But I think the last thing the Fed wants to do in their fight against inflation is actually drive the FDIC into the ground. And if you have other banks that have speculated on more long duration fixed income securities, additional rate hikes are going to be troublesome. So I was a little surprised to see Goldman make their statement about that there would be no Fed rate hike. But it's possible now with what's happened here with SVB. And I certainly think, at least from our perspective, 50 basis points is off the table. It's either 0 or 25 basis points. But if they skip this one time, I mean, we all know there's another Fed meeting coming. They can raise at some future point. But I think liquidity is a major issue, and I think that the Fed will keep that in mind.